Well, in the week before the election, the ratings agency S&P Global warned both political parties about the risk to Australia's AAA credit rating because of their spending promises. The election has been comprehensively won by the Albanese government, as we've been saying, so it's worth again asking about that credit rating. Jeremy Zook is the Director of Sovereigns for another ratings company, Fitch, and he joins me now from Hong Kong. Jeremy, many thanks for your time. You've put out a note yourself. You're a bit more robust about that AAA credit ratings and the government's ability to be able to manage its budget.
Hi, Ross. Yeah, thanks for having me. So last November, we affirmed Australia's AAA sovereign rating. And so what that implies, we affirmed it with a stable outlook. And so what that implies is that we don't really anticipate a change in the sovereign rating over the next 2-year period. And that affirmation did include, of course, a return to deficit at the federal government level and continued wide fiscal deficits at the state level. Now, what we've seen in the run-up to the election is, expectations of somewhat higher fiscal deficits at the federal government level. But, that's relatively in line with kind of the expectations that we had when we affirmed the AAA rating last November. So I think in the near term, at least, we don't see, say, a significant challenge to that rating. Now, I think if we look over the medium term, when we think about Australia's public finances, Australia, compared to its AAA peers, is somewhat towards the weaker end when we look at the level of the fiscal deficit, which we think about a general government deficit level, including state and federal governments. That's running close to 3% this year, and the AAA median is more around 1% deficit level. The debt level in Australia, we see around 50%. Again, in AAA peers, it's just under 40%. So when we think about the medium term, that's where a lot of our focus will be. If we see kind of a sustained upward trend in Australia's government debt, which is not our current baseline, but if we do see kind of a situation where fiscal deficits remain high and growth underperforms, and that adds challenges in terms of fiscal consolidation, that's where the risks could arise. So we think it's more of a medium-term challenge that the government will be looking to address.
Okay, so I just think that one of the weaknesses potentially is unemployment, or unemployment generally, and that is that right now you've got near on 50-year lows in the unemployment rate in Australia. The government collects about 50% of its revenue from PAYG taxpayers. If there were a blowout in the unemployment rate, that could pretty much change the outlook, I would have thought, from a revenue point of view.
Yeah, certainly if we do see a large economic shock, that does pose a challenge for public finances, I think, from both sides. Certainly the revenue side, as you mentioned, we've seen a very strong labor market in Australia over the past several years, and that has contributed to very robust revenue collection by the government, along with relatively robust commodity price windfalls, essentially, that have boosted government coffers. So our expectation is that, yeah, those commodity windfalls decline from here on. The labor market remains relatively healthy, but if we do see a shock, that would add perhaps another challenge on the revenue front. And then secondly, likely in the case of an economic shock, typically governments respond with more fiscal support for the economy. So in a downside scenario, we could certainly see more challenge for the fiscal outlook, but that would also depend on how Australia's AAA peers respond in terms of their policies.
I was going to ask you also, the real answer would be a significant period of economic growth. Australia's growth has been pretty benign over the past few years.
Yeah, certainly, if we see more robust growth, that is beneficial for all of Australia's credit metrics, including the public finances. That would help to, we think, put the fiscal outlook on quite stable footing going forward. It would also help with some of the other credit metrics that we look at, things like per capita GDP, share in world GDP, and certainly boost Australia's performance there. So, in Australia, we have seen, I think, relative to peers, actually, relatively healthy economic performance. On a per capita basis. It's a different story, perhaps, but in aggregate, Australia has performed well compared to its AAA peers.
I'll tell you what, Jeremy, I'm going to jump in there if that's okay, as I've run out of time. But many thanks for your time, Director of Sovereigns for Fitch Ratings. Many thanks for your time, Jeremy Zook.